Well, good day, everybody. This is Steve Garai from Remax Action once again, and immense privilege to have, you know whom, Fouad Wafdi with us today. He's the mortgage specialist at Toronto Dominion Bank. Welcome, Fouad.
Thank you, Steve. How are you?
I'm very well. Thank you so very much. And here we are. We're mid-March of 2018, and the Bank of Canada, along with our Finance Minister, have come to a conclusion with respect to mortgage rates. Well, let's back up a little bit about the prime rate, which they decided would remain stable because of, and this is the part that I'd like you to explain, please, and when this decision was made.
Perfect. Well, the Government of Canada decided just last week to keep the borrowing rates around 1.25%.
Okay.
Because of many aspects, uncertainty about NAFTA. We're not sure what's going to happen with our friend down south. Okay. Concerning the investments, raw materials, and all that. Mm-hmm. So we were expecting a higher growth in Q4, which did not happen. So that's one of the aspects also. And also the sensitivity of the Canadian people to the interest rate increases. The last point also is the inflation rate that stays around 2%. So all these aspects pushed a little bit for the government to just keep it simple and not to increase it at this point until we see what's going to happen in the near future.
I see. So they're taking a cautious approach with respect to looking down the road to determine which way the economy is going to be going.
That's true.
And that's very interesting because currently the real estate market is going crazy. But however, we have to qualify that. What I mean by crazy is there are fewer properties on the market, so listing volumes are slightly down or greatly down, which means that there's less choice for existing buyers, and then we're in multiple offer situations. So these news are interesting. I'm glad you're sharing this with us today.
Very good. Well, the question is, what's going to happen to the real estate market now that the Government of Canada decided to keep it as is and not to increase the prime rate? So it's gonna increase the purchases for sure, especially the variable interest rate, because of many advantages that comes with it, such as a penalty, such as the flexibility of the variable. You can change it to a fix anytime you want without any penalty or anything. So we believe it's going to increase the real estate market, and especially the variable. And people would be looking into the variable because historically people that took the variable are the people who paid less interest rates.
So they save money over the long run.
That's right, not the interest rate, but the interest portion, and people that pays faster their mortgages. Mm-hmm. So probably we will be seeing an increase in terms of the variable.
Very interesting. So what you're saying is that based on current events that we just discussed, it lends more reasons for a prospective borrower to investigate the variable side of the value proposition. Correct.
Yes, it does, because historically people have been always afraid of the variable, not because it's a bad thing, but it's just knowledge about how it works and all that. When you explain it to them the right way, they just decided that's what I'm looking for, that's what I'm going to take. So, you know, I have just to know how it works to take it.
So that should be the subject of our next video. What do you say?
It would be my pleasure to do that.
Fantastic.
Very good.
Well, thank you very much once again.
Thank you, Steve.
Until next time, and thank you, viewer. Until next time, take care.